Well, in that case, we'll go live now then, won't we? So I think, yep, we're live. We are not scheduled to start for about another 3 minutes, but I just wanted to get the screen sharing up and say hi and all of that. So you should now see my screen. Hopefully you can see a chart up there. All looks a bit weird on my projection, but I'm sure it'll be fine from your side. So I think it takes, yeah, okay, you can see the screen, you can see me in the corner, you can see me in my office. I don't always have the camera on. So I thought I'd put it on tonight. And so, where is it? Ah, there it is. Good evening, folks. So, yeah, we're due to start in a few minutes' time. So if you're watching this as a recording, just fast forward it about 3 minutes, and that's where we'll officially get started. Yeah, good evening, one and all. I elected to do this a little bit earlier this time. Normally, when I do these webinars, I do them at hi Peter, hi Abdallah. I normally do them usually at 7 p.m. UK time. But I thought actually a lot of people are probably quite happy to do it at 6:30. So what did we call it? We called it live market analysis and chat. I think that's what we always call it, to be honest. And so, yeah, it's that's what it's going to be. Hi, Hardy. Yeah, there's plenty of people coming in. Good evening. Good evening. It even tells me on my phone that I'm doing a webinar, so which is handy. So, okay, it's flashing up, and so. PB, good evening to you. G. Gabel, good evening to you. Hardy, good evening. Harry, long time no see. Hi, Harry. I know it was a long time. I don't know why I leave it every time we do a YouTube broadcast. I always say I'll do them more regularly, and then never get round to doing it. I just forget. And actually, it was one of the people who's in this room tonight who's already said hello. Hi, Michael. Who emailed me a week or two ago, didn't you, Michael, saying, Charlie, when are you next going to do a broadcast? I thought, oh yeah, should do that. So Birmingham, how much time does a swing trader need to commit per day? Right, we're getting the questions there already from Birmingham City traders. I will come to that, but let's officially get started. I want to talk about the markets as well, Birmingham, a little bit, but I will absolutely answer your question, and we'll talk about all of that. Market insights, yeah. So, yeah, we'll absolutely cover any questions that come through this evening. So, yeah, I'm just sort of counting down the clock. It's just to make sure that everything's working, which it seems to be. So that's always a bonus now, isn't it? So when everything's working. So I can't start officially until it is 6:30, which I think it is now. Shall we get started? Let's do it. Good evening and welcome officially now to this live chat evening. We do, Abdullah, yeah. With this live chat evening where we're going to be doing some bit of analysis. I've got a few charts, a few bits to show you, and a Q&A and all of that at the same time here over the next, I don't know, maybe over the next hour, I guess. So good evening or good morning to wherever you are in the world. Obviously, I'll take questions here this evening. There's already a question that's come through about swing trading, but as we go through, I will be answering questions, of course, during this. But if you will indulge me just to start off with, I'm going to have a look at the stock markets here because that's where I think we should start, is looking at the S&P. I'm then going to talk to you about what I've been up to, because most of you, I'm sure, probably see some of my YouTube videos. And so I'm going to talk to you about, well, what am I trading at the moment? What have I been trading? And what are my thoughts on the markets? That's the important thing, isn't it? So, Great Scott. Yep. We'll come to all of that. Adam, nice to see you there today. Thank you for making the video on impatience. Oh, was that for you? Was it Adam? Or I remember someone only asked me last week or a week ago for that. And you've implemented self-talk this morning and had a successful session. Excellent. I don't know if it was you that asked for it, Adam, but funny enough, there were some comments against that video from a few people saying, "Oh, that was that was really useful for them as well." So yeah, self-talk is really important. Okay, I can go through some more of that this evening. Oh, it was you, right? Okay, but it was. This is the thing, Adam. Someone asks a question for a piece of content, or could you do a video on this or that? And there's always going to be others who it, of course, it strikes a chord with as well. So yeah, it's well worthwhile asking for content. Do you think Israel Hamas war will affect oil? I think that's already done. That story's already done, really, Mir. But anyway, let's get into. I'm just going to get into a little bit of analysis. There's already questions coming through, so I'm going to have to be careful here. So I'm going to just look at the markets. I'm going to bring up a few charts. I'm going to give you my thoughts on what I'm trading over the next, how I'm seeing things potentially playing themselves out, or at least my plan overall. So I'm going to share that with you as well, and we will go through your questions here too. So I've got the S&P up to start off with, because fun enough, it's Michael. It trades that a lot. It was Michael who said, "Charlie, can you do a live broadcast?" So we'll blame him. And I think technically at the moment, the stock markets, there's not a lot to say technically at the moment. The stock market is still technically in bullish, in overall in a bullish frame of mind. However, I do want to present a few different charts to you, because one of the concerns that I've had as far as the stock markets are concerned, and really it built in November and December of last year, as the S&P rallied into December and then again into early January. We're just in this, it feels to me like we're in this sort of euphoria stage. There was a lot of expectation of, right, Trump's got the presidency, that's going to be really good for stocks, low taxes, all of that stuff. But collectively, it feels like there's a lot of euphoria out there. So in what regard? Right, well, let's take some measures here. Firstly, 0 days to expiry options trading. That is now something like 52% of total options trading. 52% of total options trading is 0 days to options expiry. That's highly speculative. So I'm just very, very cautious at the moment when you're seeing that sort of speculative nature. People putting options trades on which are going to close by the end of the day. You have to close out by the end of the day. Highly, highly speculative. Just a couple of weeks ago, one of the world's largest brokers, Interactive Brokers, said that they've seen the highest levels of margin debt on record as far as their trading clients are concerned. So there's a lot of people trading on margin and increased margin in line with with that overall bullishness. So we've got this period at the moment whereby technically there's nothing wrong with the markets and they could just carry on going higher. But for me, there's this caution that we've got a lot of, like I said, euphoria out there. So let's go through a couple of other measures. So this from the Bank of America Global Investment Fund Manager Survey, just taken a couple of weeks or so ago, which is just looking at average cash levels amongst fund managers. So it's pretty low. It's not by absolute historic historic levels, but it is pretty low here at the moment. So again, it's none of these things by themselves are some sort of sell signal, but you know, you do get. Let's have a look. So I'm trying to find my. I'm missing one of my charts. How fun is that? What did I do with it? See if I can quickly find it. There it is. Here's another one taken from a collective of sources here. This is a combination of forward PE, volatility index, and bullish sentiment as well. By this measure from this company top-down charts, we are at extreme highs as far as euphoria is concerned. So I'm a little bit concerned overall with regards to the sentiment backdrop. There are others as well, but it's certainly options trading. Generally speaking, it's got a feel to it that we just need to work that sentiment off. So I'm not necessarily looking for some sort of major bear market or anything like that, but although valuations are high, sometimes euphoria and extreme bullish sentiment can get worked off just by more chop. Coming into this year, we're coming into the third year of a bull market. Historically, the third year of a bull market underperforms. So I'm overall looking for this year to be maybe just a bit more of a choppy year overall. By historical standards, the third year typically underperforms. That doesn't necessarily mean a negative year, but it just underperforms what the other typical yearly returns can be. We've just seen back-to-back 20-odd% returns, and by historical standards, in the third year, it's 2% on average. So I'm just, and with especially with all these expectations because of the new administration coming in, it just feels like that's the obvious trade. So to me, when everyone's saying, well, obviously it's going to go up because there's going to be these tax cuts coming and all this other stuff, that I have to then look the other way, especially when I'm looking at the speculative activity that's been going on. So that's my concern. Having said that, I have to present the other side. And certainly there was the AAII, let's turn my pen off, survey that came out last week. This is the American Association of Individual Investors. So it's a survey. It's purely a survey on their thoughts. Now that's different to what people are actually doing. Sometimes it's a survey, but they are getting more bearish. So as the red line goes higher, that means that their 6-month outlook is more bearish. So certainly as far as this survey is concerned, it tells us that retail investors are becoming a little bit more cautious. Now, what we want is everybody euphoric, but certainly as far as this survey is concerned, they're a bit more cautious. But traders are very speculative at the moment, highly, highly speculative. So we'll have to see how this all plays out. But I have to present both sides of the equation. The way I'm looking at this at the moment is that I'm just a bit more cautious towards the stock market. I don't have any major sell signals. If I look at the COT report for the S&P futures, it's not like we're in any sort of extreme as far as fund managers are concerned. So there's nothing particularly going on there as far as the fund managers this is hedge fund managers who take large speculative positions in the futures market there. So I'm not seeing any sort of extremes or anything there as well. So that's fairly muted. So I'm not getting anything from there. So from a technical perspective, I've not got anything really other than the fact that history suggests that this could be a bit of a nothing year. Doesn't mean say we don't go up, in the near term and make new highs and all of that. But it just is a concern to me from a sentiment perspective. If the sentiment wasn't this speculative, I'd be really bullish. And that's just the way it is. Usually what happens, as many of you know, stock markets tend to climb a wall of worry. And what we mean by that, when I'm talking about a wall of worry is that, fun enough, in 2023 and 2024, the masses were much more bearish towards the stock market. And now we've come into the back end of 24 and into early 25. They're now flipped in the main to be highly speculative and bullish. So what we want is them to be bearish as stocks are going up. Why? Because it means that if people are on the sidelines because they're bearish, even as stock markets are going up, at some point they may throw in the towel and and invest into the stock market, thinking, "Oh, I'm going to have to get in." That's the typical wall of worry. When everyone's bullish and euphoric, it means they're in and happily trading around, and you think, "Oh, that speculative activity at some point usually comes to roost," and It happens time and time again throughout history. So that's my view overall in the stock market at the moment. Yeah. If you were long S&P, what would you be targeting? Do you know what, Michael? I really don't have. If I come out to the monthly chart, for example, it is a wonderful trend. I don't have any targets. Of course, yes, you can put fib extensions on and do all that stuff, but I genuinely don't have any, Michael. So at the moment, so I think I would just be, if I was long, I would literally just be in a, trail the stop mode. That would be it, Michael. I would literally just be moving my stop up every time price makes a new high, does a pullback, and then goes and makes another new high. Then I'll just be trailing the stop. That's it. Basic as that, because I haven't got any major targets as far as patterns are concerned. Okay. Yes, I can see there's lots of comments coming through already. So yes, I will talk about. Just make sure I've got another chart here. I think this is another interesting one, which I think is important to look at. This is from Bank of America, the fund manager survey. So the whole long dollar. Someone just mentioned forex. The whole long dollar story has been quite interesting in that. As we came into January on the back of December, um, Bank of America was saying that as far as fund managers are concerned, and again, this is a survey, they felt that long dollar was becoming a crowded trade, way behind, obviously, the Magnificent Seven, but nevertheless, the pale blue line was getting high. Now, the dark blue line shows us where we are this month in February of this year. And you can see that it's already dropped away as the dollar has backed off. So as far as the fund manager survey is concerned, certainly any frothiness towards the dollar has backed off, which is good because, as someone's just said, Adam, about the trend of the dollar, yeah, you to an extent, you need, if you're going to be long, if I come over to the dollar itself, if I was going to be, I'll talk to you about my plan and my positioning in a minute. But if I'm going to be long the US dollar, then I'd rather be long when it's not at an extreme like at the moment, and it's not. So sometimes markets have a great run, like the dollar had from September, and then they have to work it off, like I've just sort of said about the S&P from a sentiment perspective. So if the dollar just chops around for a little bit, forget how long I've put that on as far as time's concerned, but chops around for a little bit, then as it starts, if it's the case, and it starts to creep its way back up again, then it sneaks up. And this is what happens with price all the time. So then sentiment, the next move that it has back up, sentiment's not at an extreme the next move. If that was to happen, I'm going to talk to you about my plan and my positioning in a second. But to give you a classic example of just this, we'd have to go over to gold. So gold in October, November time, got really frothy from an extreme perspective as it had that run there. And again, we had lots of articles all coming out from a sentiment perspective talking about gold. And we were hearing, gold, cash for gold, and all of that in the high street shops and various places. So it was a bit of a worry there when everything, again, from a sentiment perspective, gets really frothy. Now, gold ended up having a pullback, chopped around for a month or so, and then snuck its way back up. But by the time it got back up to that high where sentiment here was really frothy, it wasn't. It had worked it off, snuck its way back up. Lots of people not necessarily sure, is it going to break? Is it going to go to new highs? And look where it is now, just on the verge of obviously 3,000. So if you take that same sentiment and we could apply that to the stock market, as I've just said, if the S&P just chopped around for another month or so, don't let me put you off, Mike. But if it did, it would work off that sentiment, and then off they go. And it's the same coming back to the dollar. So the dollar at the moment is retracing. Where's my dollar gone? So the dollar at the moment is in retracement modality. And but if we zoom out on the chart from a technical perspective here, well, it's doing a retracement, but it's retracing back into a lot of levels here, a lot of levels as it's and all of this cluster of price action as well. So it's coming into what will be quite an interesting price action zone, really from these and even back down to that zone down there about 105 as well. So it's going to be slicing into a really interesting area, all between sort of 105 and pretty much where we're at the moment. So yeah, I will do. I'll look at that. So, but what will happen is if the dollar turns around, in the next couple of weeks to some degree, it may take its time, like I just went through with gold. So it doesn't have to just come straight down and straight back up. It might chop around for a while. And because again, from a sentiment perspective, what that does is it creates indecision amongst traders. Traders are indecisive. Oh, I don't know whether it's going to go, whether it's going to break, or that's what you need. You need traders who've got opposing views. And also it's what keeps some traders out of the right trade, and that's just the way the markets run. Most markets run with the fewest number of participants in them. So maybe it chops around for a while before it actually starts moving, a bit like that example of gold there. So okay, so let's come back here. So Adam, I see some people waiting for the euro to have parity with the dollar. I personally can't see it, but if the dollar goes on another run up, then maybe. Yeah. Okay, let's go to the euro. Let's get over to some of the currencies then. Right. Okay. So my positioning right now is actually I'm long euro. Sorry, low Wall Street, please. Yes, I am still in the middle of that. I'll talk about that later. So my positioning right now is I am long the euro, but it's only actually been since last week. So what happened with the euro coming down into January, down at the lows, with the benefit of hindsight, by the way, I was short. I was short from back up in November and built my positions. Nice run down. Then we had that retracement. And then we rolled over into that gap when Trump first announced the tariffs that weekend in whatever, late January. So I was short all through here, but I knew that the sentiment was getting frothy again. So why is that? Well, it was all about the bond market really at that point. So bond bonds, bond yields. We saw gilts in the UK going up to 5% or so. We saw the US 10-year going to 5% at that time. If I bring up 10-year yields, then where was it? Over here. There we go. So there was a lot of concern about the bond market at that point. So yields go up, bonds are coming down. So at that stage, and so coming back over to the euro. So from a sentiment perspective, there was a lot of again a lot of noise at that point around, oh blimey, these yields, bond yields are right up at 5%. What if they break and all of that? So I was well aware that we were getting frothy. Again, sentiment is a massive part of my trading at times when we get to extremes. But I had targets on the euro at that point, still bit below 101. We didn't get down there. So I'm not going to adjust my targets just because the market's got frothy, because markets can get frothy from a sentiment perspective, and the market still ends up selling off for a while during that phase. So anyway, I'm just transparent in that regard that, yeah, so I was sitting in these lovely shorts. We had a big old retracement, still in my shorts, added another short there. And at this point, I think I was up well over 50K. That Sunday night when we gapped down on my combined accounts, I was sitting up on a really nice 50K. I think in the end, because we've trailed up, or sorry, we've moved up, I've trailed my stops down, just made in relative terms, a few thousand. That's it, having been up well over 50. So I don't know exact numbers, but it was definitely well over 50, because I was watching that evening in the pre-market when Trump announced those tariffs that weekend. The pre-market was right down at 102 and went below 102. So I had my accounts up, and so I could see on some of my accounts how much I was up, because they were showing the pre-market at that stage. Not that I'm basing my decisions on P&L, but I just see it because that's what was going on at that stage. The reason I'm talking to you about that, because I think it's important, is to say, look, we all have to be in trades which are just going to retrace against us. And so that's what happened. So anyway, we've done the retest here. And then, of course, on that, and I'm not a trader who's like, oh, and when people say, oh, you should have done this. No. I just stay with my plan. And so trailed my stop. And it just so happens I'm now long. I don't think I'm going to be long for that long. So I'm only looking towards 106, really, this zone up here from the highs of January through to about 106. It's not that we can't go higher and that we won't retrace higher. I'm just saying that as far as this long is concerned, I'm not seeing this as some big trade. It's just what I call a vanilla trade. It's a standard trade. So it's too cold to wear shorts. So that's all I'm at the moment. Now, I've said that I was going to talk to you through my plan. So my overall plan actually is then to reshort somewhere up here, somewhere up in that zone. So if the euro can continue bouncing, I am going to reshort. Whether it's right or wrong doesn't matter. Like I've said earlier on, you need to have traders who have different opinions on any given market. So it doesn't matter if some of you sitting there thinking, no, the euro is going to go back to 110. Yeah, it might well do. And that's fine. We all have a plan at different stages, and so and a different view. I'm just presenting to you what my plan is. And so I will be looking to short. At the moment, what happened with the euro from a technical perspective? If we come out to the weekly chart, the euro had gone through this, what ended up being sideways chop for the best part of 2 years. Okay. What's happened is, into late last year, we broke down. We've technically taken out all of these lows within that sideways range. So as far as I'm concerned, the moving averages have all crossed to the downside. Don't get me wrong, I'm short in the very short term. I'm long right now, but that's just, I'm just hopping on the short-term momentum. But overall, I'm looking, if we come up a little bit more, to then start looking at for short setups. So I'm still going to be looking for certain setups to come along into resistance zones, but that's my overall plan. It's because technically we've broken down. I'm looking for this to roll over. Someone mentioned parity earlier on. You can't see it. That's fine. I am going to be looking for the next target for me overall is going to be towards parity. The good thing is if we do roll over, and I don't know what will create it, there's all sorts of scenarios, especially in the world right now, as to what could create it. If we do roll over, we can speculate on all those things, but I've been trading for 20 odd years, and in the moment, you never know 2 months down the line or 3 months or 6 months what news it's going to be like that's going to create it. Like back here when I was shorting we were all in my community shorting in the late 2001 is when we started in the late September. Now, I had some analysis where I was looking for the euro to come back down to 103 and then parity, even at that stage back here. But I didn't know what the events were going to be that were going to create that. I didn't know that once we got into 2022, there was going to be a bear market. No one knows this stuff. So you can speculate, and that's what we are. We're speculators. And so I was just trading my plan then as well. I don't know what the events were going to be. Much like I don't know what the events are going to be. What are the key events? We can speculate on what they might be, but I don't know what the key events might be if the euro and the other currencies do roll over. I don't know. So we'll have to see, won't we? So at the moment, we've got a bit of momentum building as far as the upside is concerned. And I'm just trying to ride a little bit of that. And then I'll be looking to see if this can roll over. And like I've just said, in relation to the S&P, in relation to gold, that if we do roll over, if the euro gets back down to 102 again, we won't have all of that same frothy sentiment at that stage. It'll just creep its way over, and we won't be at an extreme in sentiment. And that's what will allow it to come back down and test potentially parity. Now, what's the flip side to that? Because I'm telling you what my overall plan is. I'm not telling you the specifics of where exactly I'm planning on getting in and all that sort of stuff, and trade management. I'm just telling you my overall plan. But what about the other side of that? Because I think it is important to look at all sides. And I think it's important to have a plan of, well, what if it doesn't go to that level? And it doesn't roll over and it actually carries on going up. So because there are arguments, I think UBS said last week they're looking for 115 in the euro dollar. Where's 115? Back up here. So UBS looking for, I think it was 115 to 116 is what some of their analysts said. So that's what makes the market. Different people having different views. As far as I'm concerned, unless the euro can really materially get a lot higher, I don't really have any technical reason to stay on the long side for a long period. Because technically at the moment the move is to the downside, and this is still a retracement of that move at the moment. This is still technically a retracement of that at this stage. So what does the euro need to do to get me interested in the long side for a longer period? It's probably going to need to be back above 108, because at the very least, for me to materially be looking at it and saying, okay, we may be coming back up to retest the 112 zone, etc., etc. So I think around about 108, because it needs to get comfortably through all those old lows in order to give that So there you go. So it's a little bit on my overall plan and just my view, what I'm looking to do, and where I would materially adjust my view. But the euro is going to have to be comfortably above 108, I think, at this stage. So if that happens, fine, I'll review that. But at the moment, I'm seeing this all as just retracements, and it's the same across the board. So someone said, "Yes, Adam. Yes, exactly." Prince is saying, don't you use the DXY as the guide for the US pairs? Yeah, maybe you've come in late. We've already been looking at the dollar index just earlier on. Just bear in mind, Prince, that the euro dollar is the biggest currency pair. And actually, the euro dollar, more often than not, looks like an upside down dollar index. More often than they're not exact, but so I don't really need to spend too long on the dollar index, because I know that the euro more often than not is a bit, I know they're not quite the same at the moment because we've had a lot of strength in the yen and that's affected the dollar index. But yeah, I don't really need to be looking at the dollar index too much. I refer to it like I did earlier and saying, okay, we're coming into this support zone between basically 105 to really 106 or so, about roughly where we are at the moment. So we're coming in. I still think we've got a bit more downside in the dollar index at the moment. That's why I'm long the euro dollar. But at some point, yes, I'm looking. If you're looking at the dollar index, technically, it's not done any damage at the moment. Technically, this is just a retracement of that move, and until it does unless it does a lot more. So as it comes down into these technical levels, well, we've got to be looking out for it to potentially start bouncing at some point as it comes down there. So right, there you go. Hopefully that answers your question there. Okay, let's put that back. Now, as far as the other currencies are concerned against the dollar, so the major currency pairs, I know there's other comments coming through. I'm trying to keep up with them. I'm just grabbing some that catch my eye, and I will scroll back up and look at your questions. But as far as the other major currencies are concerned, they all move in similar ways. The euro's lagging at the moment because of, obviously, for obvious reasons, the Ukraine situation there. So it's having a good day here today, but it's behind. If you look at the pound's at new highs for the year here, and likewise the likes of the Aussie. So they're already leading. So the euro's sort of a bit behind the others at the moment, but essentially when I come out to the higher time frames again, to the weekly charts of like the Aussie here, it's the same as the euro overall. They just move in certain slightly different degrees of each other. And so it's the same story here as far as I'm concerned with the Aussie. I don't know what the catalyst will be, but I will be looking for the Aussie to roll over at some point. So I don't think it's going to roll over imminently. But I am going to be looking for the Aussie, the Kiwi. I'm looking for the dollar to have a material bounce back at some point. So they could retrace further, like I've just said with the dollar index itself. But I am going to be looking out for sell setups coming. So that's how I'm going to be approaching it anyway. So if it gets to 108, Michael's saying if it gets to 108, that would be close to the descending trend channel quarterly chart. Yes, what Michael's talking about there is on the probably here. This is on the euro dollar. I'm assuming, Michael, you're probably talking about this descending triangle. I've got a load of my trend lines on. So if the euro comes up to the 108 zone, then it's coming back up to this downtrend line. Hi, Timmy. To this downwards trend line. Yeah. So now, again, I have this concept called pebble on a pond, and I use it with horizontal support. If price comes down to horizontal support, bounces. A bit like you're skimming a stone across the top of the pond, and then plunders through. So the more tests that I see, the more likely at some point it's going to be coming through. Now this downward trend line hasn't had that many tests at the moment, but it's had obviously that one there to create the downwards trend, and it's had another test here. So if we do come back over to it, and so if the euro gets up to 108 or so, yes, the potential is there that we end up breaking out. But I'll worry about that, and the euro's got to get to 108 first, so I'll worry about that then. But yeah, you can see I've got a lot more trend lines on, but I turn them off when I'm doing a presentation like this, because there's a lot of lines there on the chart. So yeah, but overall, what I find interesting coming out to the quarterly chart here is that this was the lowest close on the quarterly time frame since the low of late 2022, and it was a lower close than all of this back here in 2015 to 2017 as well. So yeah, I'm still very, as I keep saying, cautious towards the upside. So it's not to say that it doesn't go, and with global events being what they can be, ceasefire Ukraine, how that materializes, all of that sort of stuff. But that could produce a big upside move in the euro dollar. It could also get quite complicated and produce the next down move in it as well. So depends on how that all materializes. Okay, let's come over to could you take a look at Bitcoin dominance? Yeah, I have got it on here. It's interesting actually, Bitcoin dominance. So I've got it. It's in my watch list, but I've got to find it now. I might have taken it out because I don't really. Right, bear with me a second. I'm not going to use the Bitcoin dominance in TradingView, and I'll explain why. I've just taken the screen. Oops, taken that off. Taken the. Let's have a look here. I'm just getting this up off screen, and then I'll bring it back over. There it is. Because I was only talking about this in my trading room just last week. Bitcoin dominance, if I click on that, it's sitting at 60%. So, but the TradingView charts are very different. So Bitcoin dominance here, this is on coinmarketmap.com. You can, if you don't use that, it's just a handy, gives you some overview stuff in cryptos, then it's sitting at 60%. But I know that in TradingView, their charts of it, it was declining. I can't be bothered to type it in now because it's probably in my list somewhere and I've missed it. So do check that out. So Bitcoin here by this metric is pretty good. Now, while I'm here, I might as well go to the Fear and Greed Index as far as Bitcoin's concerned. You can see because Bitcoin itself has gone very flat and gone sideways, we've moved away from extreme greed of last year. And really, we were only on greed just a few weeks ago here. So again, because Bitcoin's gone sideways for a while, we've seen that change. So if I bring up Bitcoin here, because Bitcoin's gone sideways, it's just worked off that again, that euphoria, that frothy sentiment. So yeah, which is a good thing. That's what we want to see. Bitcoin got really frothy when it got to 100,000 in late last year, as far as sentiment's concerned. So then they have to work it off. People get really greedy. People start thinking, oh, when you, no disrespect, but when your friends who have no interest in trading start getting involved in cryptos, you know that, it's probably not a good sign. So there you go. Right. Yeah. Okay. I need to scroll back up because there have been questions earlier that I haven't got round to, such as Birmingham asked earlier on, how much time does a swing trader need to commit per day, per week to trade successfully? Well, it's obviously not the same as a day trader, Birmingham. Even within swing trading, it's difficult to answer the question because you could be a swing trader who trades off of 4 hour charts, as an example. So, a swing trader trading off of 4 hour charts could still be fairly busy. I would say, yeah, probably need to check the charts twice a day, early in the morning before they go to work, and then in the evening. But you could then be a swing trader who's trading off of daily charts, and really you could then be checking your positions just once a day, once every couple of days, whatever. So, but it's not just about checking your positions; it's looking for new opportunities as well. So, um, how much time per day? Again, um, you can change that depending on what time frames you're trading off of, and you work it around your life. So it doesn't need to dictate your life. So really, I've had traders that I've trained who have traded off of, for example, 4 hour charts. They look at the charts for 10 minutes earlier in the morning. So they get up 10 minutes, 15 minutes earlier than they previously did, check the charts, scan through a few of the markets they look at, and then they'll do the same thing in the evening. So it doesn't have to be a huge amount. Yeah. Right. Okay. I'm just going to start scrolling down. Oh, I must show you something. I have to show you this. Right. I've got it all up here. We've got something brand new that some of you might be interested in. Basically, I'm going to tell you a short story here. I was approached by one of my old brokers in September last year. So he got in touch with me. He's now gone to Dubai, working at a broker in Dubai. As many of you are aware, the financial center in Dubai is just getting bigger and bigger. And so a lot of brokers, some of the brokers who are London based, are just coming out of London. So yes, it's FCA regulated and all of that, but the regulation is becoming so burdensome that some brokers are just shutting up shop in London, in the UK, and just concentrating their activities, outside of not only UK but Europe as well. And plus, of course, you've got lots of brokers who are Dubai based and out in the Middle East. And he said, Charlie, he said, I've been out here for a while. He said, it's just like London was 25 years ago. He said, you should have, he said, if you've got anything with your reputation, being what I do, managing money here in the UK, I'm regulated, I'm under a regulated umbrella. I manage money under that. And he said, but you should have these. He said, it's red hot out in the Middle East and further afield. He said, there's such a high demand. He said, I'd help you facilitate it if you had something. And that's trade signals. And so he said, and it was interesting because he phoned me up and I said, do you know what? I must admit, over the last 2 years, I'm finding more and more that people, I'm not talking about people here tonight necessarily, but a lot of people have got less time. And so they haven't got the time to, spend, in the markets like I do, and like many of you do. They just want trade signals, statistically backed trade signals. So it just so happened that the chap that I've been working with for the last 9 years, Evo, had only had a conversation with me 2 weeks before, and he said, Charlie, he said, I've created all of these. He's got artificial intelligence based trading software. He said, I've let it run, and he said, it's done at. He says this was like in late 23. He said, and it did like over 1 billion combinations, looking at just letting it run on TradingView, and it's just tested all sorts of strategies by itself, and it's come up with all of these bots, if you will. And he said, and they've been running. This was like I said, in September of last year. And he said, they've all been running all year. He said, I started them running at the beginning of this year. And he said, no, the performance is quite good. He said, but I don't know what to do with it. And anyway, that was just the conversation. I am still spiritually a manual trader. I love analyzing the market and pitting my brain, so to speak, about against the market and all of that. That's what I enjoy. It's a deeper level for me, trading the markets to other people. Other people just want to make money, and I get that. But for me, it has to be deeper. It has to be a mental exercise, a challenge to me. That's what is important to me. But I have to appreciate that it's not that way for everyone. And a lot of people they email Sam, my PA, and she's over the last 2 years, the amount of people who email in saying, if I join your community, will Charlie give me 5 trades a day? Well, no, because I'm a swing trader nowadays. So no, he's not going to do that. Right. So anyway, long story short, we put something together to facilitate this. Now it's going to be, using the broker out there in Dubai, but nevertheless, it's trade signals. So I'm just going to share you what exactly it is. So we've put the software together. It's myself and Ali Crooks, and it's trade signals. So basically, you sign up. You come onto Telegram. We've just started it this week, so I'm quite excited about it. We've just done a soft launch this week. We've got our own channel on Telegram, and then you get a signal come through. You click on it, brings up a chart. You do it off your phone, gives you your probabilities down here because it's all statistically backed. A human being couldn't do the work that the AI has done, over 1 billion combinations, and tells you your stop, take profit, all of that. It's even got a risk calculator down here, so you can do it all off your phone, and it trades crypto, forex, stock indices, and all of that. And it shows you your chart and everything else. So, but yeah, I'm showing this on my desktop, but you can do it on your phone. And where are we? So that's it. And you can sign up for it. You get a 7-day free trial. If anyone's interested, no credit cards up front. Just give it a try. And the performance of we've got about 5 bots running at the moment. Average monthly profit per bot is 6.5%, an average win rate of 65%, and a total profit combined added together of the bots. We have to have a number of bots running because obviously some of them are triggering trades when some people are going to be in bed, they might be at work. So you're never going to catch every trade, which is why we have a few of them running to give enough signals. So then you just get your signals coming through. And away you go. So all you need to do, if anyone's interested, this is our little sales page sort of thing. It's just a little bit on there, and you can sign up from there. It is trader.smartsignals. Let me see if I can just copy that and put it into just check it out. There's no what's the word, commitment at all. Just give it a trial run for 7 days. So there you go. I've just put the link to this URL into the chat box there. No skin off your nose. And so we're quite excited about it because it's something brand new that we're just doing for those people that don't have the time, that just want a number of trade signals coming through. Fine. For them, fine. For many of you, it's not going to be for you because you might say, no, I like doing all the analysis like you do, Charlie. Yeah, exactly. But there you go. You can have a little look at it anyway, can't you? Right. Let's get back to the markets. Is there anything else on them? No, back to the questions. Right. Using 1% risk per trade, what's the biggest drawdown you've had? Back testing, forward testing. Most of my systems that I have, JB, strategies that I have, and I think you would find the same. It depends on trade. There's a lot of factors that go into things like drawdown. So, for example, trade frequency. The higher the the trade frequency, then certainly the capacity is there for a larger drawdown. For example, a low frequency strategy may well have lower historic drawdowns. So it's not as straightforward as just, oh, this is the number, because every strategy is going to be different based on trade frequency, as an example. But certainly I would expect a 20% drawdown. Yeah. So yeah. I think that you should expect that sort of number, unless you've got a low frequency system. I've got low frequency systems that only aim to make sort of 10 to 12% per year. So their corresponding drawdowns are lower as well. But if you're looking for a system, a strategy that has the capacity to, let's say, make 30% in a year, then you've got to really expect, a potential drawdown of 20%. So yeah. Anyway, AI Charlie bot. Yeah. Well, yeah. The bot stuff. Sorry. Yeah. Is yeah. The thing is, you've got all of this in here as well. Who's Timmy? You've even in your free trial, you've got all the videos in here. And all the videos, it's my AI generated voice. It's not even my voice. I had to speak into a microphone, and then so we're using AI everywhere on this. But yeah, you get all of these little 2-minute training videos. You've got a help center in there to answer questions, all that sort of stuff. So yeah, there's a lot going on there. It's very tech, but really easy to open up a Telegram channel, then start getting the signals coming through. And then we manage it behind the scenes. Ali and I manage the whole systems. We put a couple of extra messages onto the Telegram channel, and we manage the systems behind the scenes. So yeah, anyway, right. That was Timmy saying that. But yeah, but they're nothing to do with my trading strategies, Timmy. They are purely AI. All I'm doing is, because I know what's overall behind them, then is just overseeing them. Yeah. Okay. Oh, to smart signals, JB. Yeah, it varies per bot, so to speak. But yes, 20% is not all of them are at 20%. Some of them are less. But yeah, 20% seems to be about right for them as well. Yeah. So again, if you want the bigger returns and you're risking 1%, obviously you don't have to risk 1% on these. But if you're trading something which has these really good returns, so coming back over to this, these monthly profit numbers are based on 1% risk, fun enough. So really good returns, but yeah, in back testing, they have about 20%. Yeah, is about right. Yeah, for these. Yeah. Anyway, right. Let's get away from that. If you have a profit, then 1% drawdown is from that profit. Yes, that's right. Yes, it's just the drawdown from a high. Yes, it depends on, with any trading strategy. You could start your strategy or start trading with it and go straight into, you could be unlucky and go straight into drawdown, couldn't you? Or you could be fortunate that you build up a buffer before the next drawdown happens. Danius. So yes, it depends on 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 that, but that's just trading, isn't it? Yeah, well, yes, Timmy. I mean, that's why we put this together. There's a big demand for it. We've put it out there. We've just put it out there. It's going out to the Middle East, Far East, and all of that. So there's a lot of demand out there. But I thought I'd mention it because obviously I'm excited about it. It's our little baby, but it's just quite. There's just a lot of demand for signals, and that sort of stuff. And people can just choose what they want to take. They don't have to take everything, So they just can use it as a signal service. Anyway, there you go. Right. Let's come to link for Telegram, Danius. Just come to that link that I put in, and that will then see you through from there. Right. Let's get back to the markets then. Adam, when you did day trade, Charlie, did you trade news days? They seem very unpredictable. I'm looking up because I'm trying to remember. It was a while ago. Yes, I did. A classic would be years ago. I used to love trading FOMC. So I used to trade a certain pattern on the S&P on FOMC. So yes, but I would never trade before the news. I knew traders who would say, "Oh, right, I'm going to bracket the news and I'll buy the breakout." And you're like, "Don't do that." And I know people who have been trading for quite a long time who did that sort of thing, and they got broken by it because you're susceptible to slippage. And sometimes the news would go and the market would go one way, then it'd flip back and go the other way. Oh, carnage. So no, when I was trading news, I'd be trading on the back of the news. So after the news event is out. So yeah. But I mean, I did used to like day trading, of course. But it was although I was still trading after this event, I knew that after this event I'm about to mention, I thought for me things started to change, and then there was two factors that stopped me day trading. Right, so number one, SNB, January of 2015, Swiss National Bank crisis. So if we go to Euro Swiss, that's Euro Yen, Euro Swiss. And if I just take this back to 2015, then there it was. What was the date? The 15th of January. So now on the chart, it says that the Euro Swiss, I wasn't trading this, by the way, because I always trade the majors, not the crosses. So, and I never wanted to trade something like the Euro Swiss because we knew that it was a currency pair that was manipulated by the central bank. So I've never been bothered about that. But anyway, so it went from 120. Nowadays, the chart shows that it went from 120 to what? We'll call it 98 down here. And it literally went there in the space of 5 minutes, right? So this is in 2000. This is 10 years ago. 10 years ago last month. It didn't. This is what the chart's showing now. I can tell you right now, because I was there in my trading room at that point and speaking to brokers, they were getting quotes down in the 0.82 area. It was absolute carnage. So I was just like a spectator in this. So it's like, oh my God, look at that, They withdrew the oh God, what's the word? Support basically of the Swiss to the Swiss franc, and anyway, everyone going into that, I say everyone, but traders all around the world thought that the Swiss National Bank were going to support 120, and then one day they said, "Well, we're not going to do it anymore," and that's when all hell let loose. So it actually went a lot lower. So it was sort of, so it's showing on the chart here. That's about 2,000 pips. The reality, because I was there at that time, it was being quoted at 90, not 98, and lower. Like I said, all the way down to 82. I heard of people who had been long getting filled at 82. You imagine if you're long, that's it. People just blew up their accounts, completely. So on the back of that, 3,000 plus pip move in 5 minutes, everyone got burnt. Some brokers went under at the time. Even the tier one banks, the main liquidity providers at that point, they got burnt as well. Because if you imagine if you've got a trader, little trader who was long up here and I had a story of this. Someone got in touch with me. He had £8,000 in his trading account at that time, and he was long or had been long Euro Swiss. I better not mention the broker, but he was with one of the biggest London brokers. And because of all the slippage and the size of the move, the broker closed him out, and he was at minus £48,000 in his trading account. And the broker was saying, "You owe us £48,000, and we're going to come to you legally for that." And he was really, as you can imagine, very stressed and all of that. Now, don't worry, because subsequently all of the industry has changed on the back of that. So this can't ever happen again, because brokers can't do that. Fortunately, that guy never did have to pay that broker, by the way, as well. There was a load of that broker's clients got together and formed a legal defense, and they never had to pay it. But anyway, so you imagine the tier one bank who's providing the liquidity, they're not getting paid, because this money is supposed to be going up, via the broker, then back up to the liquidity provider as well. So whoever that broker's liquidity provider is, they didn't get paid as well. So everyone got burnt to some degree or another back then. The problem is post that. So we get past all of that, and I'll just bring this back to the other currencies now. Is that the liquidity was pulled, and so the markets got a lot more sticky intraday. They weren't flowing as much through the day, so the liquidity just changed within a few months of that. And you could see it. You couldn't see it on an end of day chart, but you could see it when you're looking at the intraday price action. Price would be moving a lot more sticky, like you see even to this day, where price will move and it will sit there for like 4 seconds and then it'll move again. That never happened previously to 2015 when that happened. So I knew the writing was not on the wall, but I like reading the tape. And so from an intraday perspective, and it all changed because it got so much sticky. So I didn't like that. And then in 2000, when did I get the dog? I think it was the end of 2016. We got our dog, and he took up a lot of my time. And I just thought, I don't want to be intraday trading anymore. I've got all this stuff going on. I'm just going to swing trade. And the swing trades, coming back to someone said about my the challenge account stuff, the bulk of the gains in all the challenges I've done, the bulk of the gains has always come from the swing trades, actually. Not when I was, there have been some gains from the intraday, but the bulk was from the swing trading. So I just looked at all of my trading. I thought, I'm just going to move away from intraday. It frees up my time more. I'm still in front of the markets all day, and I'll still execute during the day. If I'm seeing a setup on the back of news, all of that stuff I'll still execute, but I'm not just getting in and getting out 5 minutes later. I'm looking to get into positions to then turn them into swing trades. So everything really changed on the back of those two events. Getting a dog and previously to that as well. So I just sort of thought, yeah, I want to have more time. I don't, and swing trading provides that. But that was me, and I know lots of you probably still swing trade. Lots of people in my trading community intraday trade. So it's a personal thing, isn't it? And I'd done it for years and years and years, and so I was quite happy to sort of move, just fully to swing trading, and to give myself that time, which enables me in my trading room to be doing all the stuff that I'm doing and go to London. I was in London yesterday in meetings. And when you're a day trader, you're thinking, oh, what am I missing? Oh, I've got to go to London today, and it's not the same because you're not really missing out when you're swing trading. So there you go. Right. I don't know who they are, so I'm just reading your comments. That's absolutely crazy, and people think cryptos are volatile. Yeah, yeah, that's right. Um, the providers put out orders to several brokers at the time as well, don't they? So they all got smashed. It's not necessarily providers, but yeah, the everyone got hurt right the way up to your big investment banks who provide, Citigroup, Citibank, big liquidity providers. Everyone got hurt to some degree. So all they did is they said, well, we're going to be a bit more conservative going forwards and reined back the liquidity provision a little bit. So that's what happened back then. Yeah. What's the correlation between the dollar and the bond market? Well, generally speaking, so if we come over to the dollar at the moment, now generally speaking, when bond yields, so if we go to the 10-year, the 10-year is the most commonly looked at bond. And so the 10-year yield, if the 10-year yield is normally, and this is the thing with correlations, and I always have to say this about correlation, people who are looking at correlations. Correlations come and go. They're not an exact science. But generally speaking, if yields are pushing higher, that normally would be seen to be a positive for the dollar. Okay. If yields are coming down, normally, then that's a negative for the dollar. So let's have a look at the moment. So overall, since yields topped out at 4.8% back in January, they've come off a bit. So, okay, so they've come off a bit. Let's go and have a look at the dollar. The dollar's been coming down. But it's not an exact science, like I said. So, because the dollar's at new lows here, well, bond yields aren't at new lows for this move, But it's a general rule of thumb, though, that, yeah, higher yields, it should generally be a positive for the dollar. If yields are falling, then more likely to be a negative for the dollar. But anything can happen in the short term. And that's why I'm just sort of saying you have to be a bit careful with correlations. Okay. Pound dollar. SG saying pound dollar. I like it when people just say, quote markets. I don't know what you want, SG. But yeah, pound dollar. Yeah, it's going up. I have covered off the pound dollar earlier on. I don't know, SG, if you were here earlier, but I have looked at it. But yeah, so for people who weren't here earlier on, my short-term view is I have been looking for the currencies against the dollar to carry on going higher. I want the euro dollar to break these January highs really in the short term, and potentially 106 area, maybe even a little bit beyond that, but I'll take it one step at a time. So I am long at the moment. So yeah, when you say, is this my main watch list? Well, yes, but I'm not trading all of this, Danius. The main markets I trade, euro dollar ends up, gets 80% of my trading is just euro dollar. I will trade the others. I was trading the New Zealand dollar recently, and any of the major currency pairs, I will trade. And likewise, the S&P and the Nasdaq, and likewise gold. More so gold, but I own silver anyway, so I'm long silver anyway. I do own some Bitcoin. I did close half when Bitcoin was at 103. Why? It was Fed Day in December, and when Jerome Powell was speaking on FOMC, everything started coming down. So I thought I really should bank half. But everything else in my watch list is just there for seeing the interrelationships, like the bond market, whether it's US bond yields here or German bond yields I'm keeping an eye on. So I'm not trading all of these markets. They're more just, I'm looking at them as part of my overall analysis at times and looking at the interrelationships. Plus, also, I am looking at major currency cross pairs as well. Not always necessarily to trade myself, but in my community we talk about them. So yeah, there we go. Can I have a look at the dollar yen? Yes. The problem that people are going to have with the dollar yen, if you're wanting to short the dollar yen and on a swing basis, you just got to watch those swaps because the swaps are really high. The overnight charges if you want to be short dollar yen. So it's great if you're long dollar yen because then you're receiving the swaps. But at the moment, if you're looking at this with the view to be short, then it has to be a consideration. You probably only want to be in a swing trade for a week or two. Otherwise, those swaps do start building up quite a lot. So yeah. As far as the dollar yen is concerned, technically at the moment, though, yeah, of course, it's coming down a bit. I would naturally look at this chart and want to see we're nearly there, but price get back down to that low there, which corresponds roughly with this over here as well, doesn't it? So I'd want to see price get down into that zone. Now we're getting close, but that's an obvious one, isn't it? Outside of that, I don't have that much of a view on the dollar yen at the moment. I've been saying this in my trading room for the last couple of weeks. So I've not been spending any time on it. I'm not bothered. I wouldn't be bothered about shorting it anyway because of the reason, because I'm a swing trader. The costs of shorting it are, if I wanted to hold on to it beyond like a week, which is what I would want to do, well, those swaps add up. So they're quite heavy. So I'm not bothered about it. What are swaps? Swaps are the overnight charges, so that you sometimes receive from your broker or sometimes pay. So it's looking at the interest rate differential between two economies. So Japanese interest rates are minuscule, aren't they? They're, we'll call them, I don't know, just above zero. US interest rates are what? I've already forgotten off the top of my head. 3.75%, something like that. So there's more of a calculation to it than that. But if you are shorting the US dollar, so then you're borrowing, in that currency to then invest in the other, but that currency's interest rates are at 3.75, but the other economy's interest rates are at 0.5, then you're going to have to make up the difference. Whereas if you're borrowing in yen to invest by dollars, then that works in your favor. So then you'll receive the swap difference. So the calculations. It's a bit more technical than I've just said, but yeah. So then you benefit. So if the swaps are in your favor, so you've borrowed, let's say 0.5%, if that's their interest rate over there. I can't remember off the top of my head, but you're buying US dollars, then you get the benefit of that. So you get a positive swap. So it's better to be long dollar yen than short. It's okay to be short, but you don't want to be short for longer than maybe a couple of weeks. There you go. Percentage gain I aim for a year. Connor, I'm gonna disappoint you here, Connor, but I don't. I don't work in those sorts of percentage numbers anymore. Back in 2013, I got to a point where I'd grown my account sufficiently whereby I wasn't bothered about risking 1% per trade or whatever. That's even that sort of level, because I didn't need to anymore. At that point, I could still make some nice monetary amounts without thinking, I need to make 50% a year or anything like that. So, so if I told you, yeah, I'm not necessarily looking to make 30% a year or whatever, those sorts of numbers, that's not what I'm looking to do anymore. I don't want to necessarily have the higher risk on. I don't need to anymore. So that's just the way it is. So my personal percentage returns are boring. But then I'm trading with a bigger accounts. So that's so that's the difference. So percentages mean nothing. I still might make six figures on a good year. But yeah, like I was saying earlier on, I was in that 50 odd £1,000 trade just a couple of weeks ago. But so yeah, percentages are here nor there now. When you see that in a market 70% are long and 30% are short, what does that mean if there has to be an exact amount of both? There doesn't have to be an exact amount of both. What you're talking about is retail traders. I think retail traders are only part of the whole anyway. So, and actually, retail traders only make up just a few percent of total trading volume. So do remember that, especially in FX. So they only make up maybe 5%, if that, of total trading volume. So whatever their percentages are, long and short, are here nor there. You just joined the live stream. Are you currently in any swing longs on EI? What's that? I don't know. Trader Lawrence. I don't know. I don't know what you're talking about there. And you've only just joined, and we're an hour and a quarter in. So you've missed everything, Trader Lawrence. So I don't know. Yeah, exactly, Connor. Yes, exactly. You get it. Good. What do you? Oh, EU, the euro. You mean? Right. Okay. Why don't you just say the euro? I need to go back and read the question again now. You just joined. Are you currently in any swing longs? Yeah, I am actually. Hold on a second. Let's have a look. I'll show you. Do you want to see it? Okay, I'll show you. Okay. It's not big. I'm up £1,100 right now on a swing trade on the euro dollar. Okay, so there you go. That's on one of my accounts there. So it's not a lot, but it was only from last week. And yeah, so yes. But as I was saying earlier on, I know you've only just joined Trader Lawrence. I'm not planning on being in this trade for that long, so it won't be a big trade. Yeah, I have no particular. I'm targeting. My first target is the January high there. That's my first target. Then I'll run the second half. But yeah, I'm not seeing it as a big trade. No. Okay. Hi, Christian. Turgan, what do you think of spread betting options contracts for retail traders in the UK? Spreads seem large. Is there any point in spread betting them over the underlying instruments? I suspect, Turgan, that if you spread bet options, you're probably just going to be giving your broker a lot of money. There is your answer. So yeah, probably don't do it. Yeah. What you are using for Roger? Roger's all like. Okay. What are you using for overbought and oversold indicators? I use an RSI, Roger. Yeah, for overbought and oversold. I haven't got that on the chart because I don't use it that much, but I do have an RSI if I want to look at that sort of stuff. But I don't really, when now you're talking about it, I don't like that the term overbought or oversold, because markets can remain overbought for far longer than you think they're going to, because that's just a strong market. So if we go to something like gold, I don't know if that's got overbought or whatever. It doesn't matter. That can remain overbought. The problem that people do is they put a stochastic on their on their chart or an RSI, and they say, oh, it's it's above 80 now, so it's overbought, so I'm going to sell it. And you think, oh God, that is such a bad approach to the market, because then they find out, oh, it kept going up even though it was overbought. Yeah, so I use overbought, those sort of indicators like an RSI or a stochastic, um, as supporting evidence showing me, confirming to me the strength of the move. So therefore, I'm using them not to go against the trend. I'm using them to go with the trend. They're just confirming to me that the market is strong. So that's how I use them. You're up 22% on pound dollar, a grand total of £113. Well, that's great. Oh, there you go. It's all relative. It's all relative. Right. Good, good, good. Okay. Any other questions coming through? We've got more people here now than there was earlier. So, and we're like an hour and 20 minutes in. If you've got any other questions, I did do a load of analysis earlier on. I was talking about my trade plan earlier, what I'm trading like with the euro there. So I was talking about that earlier, and I was talking about the S&P and the stock markets earlier as well. But I think we've covered off a reasonable amount tonight. I always enjoy these, and then I say, oh yeah, we'll do it again in about 5 or 6 weeks, and then I forget because I'm just busy. So yeah, I try and get my videos out every week, as you see on the channel. But yeah. Yeah, fair enough, Trader Lawrence. Right. Will this stream be up to rewatch? Yeah, I don't know how quickly YouTube processes it, Mucho, but it will get processed fairly quick. I don't have anything to do with it. It's just as soon as I hit stop or end stream, I think it does it within, I don't know. I don't know how long, just as long as it takes for the YouTube to process it, I guess. So it'll be up there quite quick. Just go on my channel, into the live section, and then it'll be sat in there. How many different brokers do you have? Oh, about 5, Danius. What's your opinion on the COT report of Bitcoin? Most of the time, the non-commercials are net short. Yeah, I don't know, because I don't really look at the COT report for Bitcoin, but let's go and have a look. So, Bitcoin's over. Where is it? Oh, it's further down. Must be. No. So I'm just trying to find it. Oh, there it is. Right. Okay. There's adverts over this. Okay. Get rid of all that. Non-commercials. There we go. Right. Spread this out over the last 2 years. No, not really saying too much. The question. Most of the time, non-commercials are net short. Yes. There's our zero line here. But it could be, JP, that they're long Bitcoin elsewhere, and then they're using the futures to hedge. So it could be, so you don't always know what their intent is there. So it's likely that they're long Bitcoin elsewhere and then using the futures in a different way. So, yeah. What do you think about this rule? Never let a winning trade turn into a losing one. Peter, I don't know who they are. Yeah, but even if they are talking about day trading, I know I don't agree with it, JP. You can press rewind now, can you, Christian? Right. Yeah, I don't really agree with it. I think it's just nonsense, to be honest, because the best winning trades, they often retrace. And if you don't give, let me give you, look, I'm going to give you a live example now. So I've just shown, I've talked since the beginning of tonight's webinar. I was saying I've been long. Yes, I'm long the euro dollar. Got long euro dollar last week. Well, as of yesterday, the euro dollar came down to 104. Let's have a look at that again. My average price on the long side of the euro was 104.30. Okay, 104.30 on that account. Right. Okay. So with that in mind, when the euro came back down to 104 yesterday, I shouldn't allow that to become a negative, to become a loss. So in which case, I would have then got stopped out break even at 104.30 yesterday, only to see price go back up. And that's why I just disagree with it. I just don't agree. I vehemently disagree with that sort of philosophy. I understand it. I understand people doing it, but I think that so often you end up missing out, getting clipped out of trades, only for them to carry on. So no, I'm not. I'm not a believer in that, and I don't know who those people are. Right. Hopefully that answers your question. That's a good example there. Can you combine US Treasury yields with any US based pair on the same chart or even gold for an overall sentiment idea? Can you combine US Treasury yields with any US based currency pair on the same chart? Well, yes, you can overlay them on a chart, yes, or even gold. I don't know if it would give you an overall sentiment per se, but at times it will do, Daniel. Like I said earlier on tonight about what happened with those bond yields back in earlier in mid-Jan. So, but again, you just got to be careful that these correlations they ebb and flow. They're not an exact science. So, but yeah, you can do an overlay on a chart. Yeah. Thank you, Michael. Sorry, we did a bit on the S&P earlier on, didn't we? If you can make a video on what was the turning point that made you consistent, disciplined trader while you starting your journey, you're struggling with discipline. Well, check my video out that went out yesterday, Abdallah, because I did a video for someone on an element of discipline there yesterday. I think it was about impatience. So do go into the channel because I did something on that. Yeah, it's just a case of coming up with a story about what you're saying there. Okay, I'm just having to think about what to title it. So I'll see. I have a load lined up of titles usually and requests, but yeah, I'll do something at some point. Could you break down your entry reason in the euro dollar? No. Then I'd be giving you away my strategies, Segir. I can't be doing that. I'll talk to you overall about things that I'm doing, but no, that's that's what I do in my trading room with my traders. You have to respect that, So no, I can't go into the specifics. So. But I've told you what I'm looking for. So overall, as far as levels, and stuff are concerned, but I can't go into everything because there's only so much I'm gonna go into as far as absolute detail is concerned on particular strategies. You have to sort of understand that. Right. Yes, people are saying, I think people are starting to say, yeah, thanks for that. So I think it's a good time. It's 8 p.m. now. Crikey, we've been going for an hour and a half. So I think it's time to say good night. And so thanks ever so much. There's loads of us in here tonight. So thanks for coming along. Hopefully there's been some elements there tonight. Look at that sentiment. And we could have spent more time on sentiment. I spend a lot of time on market sentiment. It really is helpful when a market is getting a bit frothy. We used the examples of gold earlier on, the stock market, the bond market, and therefore the dollar. So there's been a lot of that going on. And so I'm constantly trying to get a gauge and a read of sentiment by looking at various things. COT reports is still a gauge of hedge fund manager sentiment, and if they're collectively getting into an extreme and all sorts of things going on. So yeah, hopefully there's been some information there, and of course I've given you my plan over the next whatever month or two. and what sort of levels I'm looking at trading around, and what my overall plan is there. So, and what happens if that plan doesn't materialize as well. So you get a bit of an idea there. But yeah, hopefully it's been of use. And when's the next one, Mucho? Yes, well, if I say, oh, I'll do it again in 4 weeks' time, don't hold me to it. What you have to do is remind me in about a month's time. Just remind me, and put a comment against one of my videos, and it'll be act as a reminder. So we're on at the moment, what, the 20th of February. So probably about the beginning of March would be nice. About 5 or 6 weeks is about ideal. Variety, do I use volume? I used to, but I don't use it much nowadays. No, I don't really have much use for it. I know some people swear by it. I used to use it for intraday trading, but on swing trading, I don't find much use. So no, I don't. Where do you want to contact me? Go to Charlie Burton Trading. Just go to the channel here on YouTube. It's got my website on there, so you can contact us via my website. It's only me and my PA. We're a small uh, trading company. It's just Sam, but so you would just contact her via the website. Yeah, there you go. Right. Enjoy the rest of your days, and I'll see you soon. Take care.